My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey everybody, I'm Bob Johnson, aka Bob Mortgage. Welcome to the Mortgage Report. I do this video update every week so you know what's going on in the market and to help you make decisions as it relates to interest rates, so you know what to expect as you're out there shopping for a home. If you're in the market to buy a home and want to explore loan options and interest rates, give me a call at the office at 214-631-5626 or tweet me at Bob N. Johnson. All right, let's jump right into this week's Mortgage Report. Last week was a much better week for mortgage-backed securities. MBSs were in the green, as was the stock market, and it was somewhat fitting since we ended the week with St. Patrick's Day. If we look at the charts, it's nice to see we broke out of the negative downward trend. That was really important to see us break out and move upward this past week. I'm going into this week carefully floating as we're currently trying to break through that ceiling, the next level, the red line in my chart. If we do, we could experience a nice little run up, and that would be great for bonds and interest rates. But breaking through will be tough. We have a lot of downward room between the ceiling and that floor level, the 101 basis point line in my chart. In economic news, the big news from last week was exactly what we expected. The Fed hiked the Fed funds rate by 25 basis points. Now, as I've stated before in previous videos, a Fed hike is not always bad for mortgage rates. It's about the tone, the language used to describe the hike and pending hikes. This time the tone was a bit on the dovish side, and Yellen said there was not any current plans to cut reinvestment. This set the day for a huge run up in stocks and bonds, and on Wednesday, mortgage bonds closed up nearly 80 basis points. You know, I get asked often, is it really better to buy versus rent? I do classes, seminars, and events on this topic all year round. I'd encourage you to give us a call at the office or email me to find out when we're going to be doing the next event. But here's a visual for a quick glance. This chart shows numbers comparing a $300,000 purchase with a minimum down payment 3.5% versus renting for $2,000 per month plus renter's insurance. If we extend this out over 9 years, take into account home price appreciation, rent increase, tax benefits, and the cost of selling in 9 years, buying a home will provide a net gain of $213,000. So my question to you, why are you waiting to buy? All right, back to the markets. So what's my position this week on interest rates? I'm going into this week carefully floating, as I want to see if we can break through that ceiling and experience a nice little run up with lower rates. It will be tough though, especially with a light week in economic news. So with that said, for the short term, the next 1 to 2 day locks, and the long term 30+ day locks, I'm taking a neutral position as I expect the market should stay close to open, plus or minus about 25 basis points. Bottom line, having been a mortgage advisor for the last 20 years, I'm always looking for ways to maximize your tax strategies, lower the amount of interest you pay, and deliver to you the right home loan product at the right price. If you're in the market to purchase a home, or you're even considering a cash out refinance, give me a call at the office. I've done this for 20 years and have been blessed to have provided financing to over 25,000 families. I'd love to help you with your home financing options. Your dream home may already be within your reach.